Back with you on the Market Day Report. I'm Marlon Bowling with you on a Monday. We're watching your ag commodity trade as we get the week rolling. And on the futures trade, we have had kind of a choppy market here, a mixed bag, if you will, here on the grain trade. Let's take a look at the corn first, and we'll see what the corn is doing right now. We opened up about 3.5 cents lower at the opening bell and then firmed up a little bit right now. We're trading about 2 1/4 lower on that nearby July contract. So we're at 388.5, now 2 lower. New crop December is down 2 1/4 at 396 per bushel. Now in the soybean trade, we have July there currently trading at 1059.5. That's down 5.5 cents on the day. We're a penny and a half from our low. Oddly enough, we're about 12 cents off of our high of the day already. Let's take a look at November. It's down 2 at 1052.5. Now going to the wheat trade in Chicago wheat, we have July now down 6.5 at 468.25. And Kansas City wheat, we have July there trading at 449.5, down 6.5 cents per bushel. Meanwhile, Minneapolis wheat, the spring wheat trade, has July down 3.5 at 532 per bushel. All right, let's go to the trading floor and bring in OlverSloupe. He's with iiTrader in Chicago. He's talking to us live and direct from the edge of the trading floor. Happy Monday to you, Oliver. How are you?
I'm hanging in there. I wish the grain markets were hanging in right there with me.
Yeah, so tell me, what are you hearing about any potential damage? Apparently, the trade must not think there was any over the weekend from cold temperatures in the northern plains and upper Midwest.
Yeah, it doesn't appear that the market is pricing in damage over the weekend. We do have crop progress out at the end of the day, 3 p.m. Central Time. So for the corn, they're looking about 70 to 75% to be complete. But I think more importantly, you just have some traders kind of sitting on their hands, maybe even squaring up positions, because we do have an Informa update. They're going to update the U.S. acres, and that's going to be in about 45 minutes, I believe, to 10:30, 9:30. So that's going to be something to keep a close eye on. We've been talking about this for a long time now, weather concerns and delays in the Midwest. It's going to be interesting to see if Informa starts to allocate some of those corn acres to the bean acres. And if that's the case, that should put a good support under the corn market and maybe put a little bit more pressure on this bean market.
Yes, that's a good point. I was going to ask you about that if you were concerned, because it seems like this morning all we're doing is throwing bullish news at the corn market, and it doesn't seem to be responding. We have a lower dollar. We have a sharply higher crude oil market this morning. We had the cold temperatures out there, possible planting delays. Why is the corn lower at all?
Yeah, I think this is just, nothing goes straight up, nothing goes straight down. So we're consolidating a little bit. We've had a great run here over the past couple weeks. 384.25, 386 is going to be a key support level that we're going to need to hold on a closing basis for that July contract. That's the 20 and 200-day moving average, as well as the retracement level. Now, ultimately, I think this support level holds, and there's good value to the upside. 94 to 95.25 is the top end of the range. If we break out above that, I really think we could test the April 21st highs about 407.25.
All right, now as we take a look at the soybean trade, is there anything overseas, like in South America, that's affecting the markets? Because we have been watching closely the weather in Argentina with their harvest going on.
Yeah, there is a whole lot going on in Argentina, not just on the weather front, but also on the political side of things, which is really affecting the volatility in the market and the global market as well. And I think that's kind of playing a hand into the recent spike in volatility that we've got outside of the USDA report that we got over the past week. And like I said, a lot of traders are really looking forward to this morning's Informa report to see if we do get a few more bean acres than previously anticipated.
And the one thing that's concerning on the soybean trade, the nearbys are leading the charge down. They're down a nickel when the far out deferreds are barely lower at all. Let's take a look at the cotton market before we get into the break here. Get you an update here on the nearby July contract. And right now we have July cotton currently trading at 61.2 cents per pound. That is up 58 points on the day, so a bit of a rebound there. All the heavy rains headed for the Delta are probably helping the outlook, according to analysts this morning. We'll pause for a break and we'll come back and have more with OlverSloupe in 1 minute. Back with you on the Market Day Report. I'm Marlon Bowling. We're talking right now with OlverSloupe. He's our guest analyst. He's speaking to us live from the trading floor in Chicago. He's with iiTrader. And Oliver, thank you for joining us on this segment here. We're going to take a look at the cattle trade. And we did have on the livestock summary that we had this morning, we had some live cattle trade that took place Friday afternoon, reported by USDA, and it seemed like it was a light trade, but the market was about 130 to 133 per hundredweight on a live basis. Dress basis 204 to 205. 208 again on the hundredweight basis there. So that was more of a cleanup trade from what took place on very heavy activity on Thursday. So how do you think this cattle market is faring today so far, given that as background information?
I think it's very, very well. Last week's trade was a wild end of the week, Thursday and Friday. That live cattle contract I want to zoom in on first. We talked about that gap. It went and filled that gap, and we saw the buyers really step in a big way. And I think that bodes well for the longer-term trend. I think we start to see demand increase a little bit. Some of the targets we're looking at, the recent highs for that June contract, 124.68. If we're able to get out above that, there's really not a whole lot in the way until about 126.70, which is the 200-day moving average. We clipped it right at the beginning of the year, but weren't able to get out above that, and I think we retest that, and who knows, maybe we'll get through it this time. Sticking with the cattle, though, one thing to be noted, probably some position squaring this week with the cattle on feed on Friday.
Oh, that's right. Okay, so we have that coming up Friday afternoon. That'll be after the markets close. How much positioning do you think there needs to be done on the part of the commodity funds here?
Well, we won't be doing a whole lot, but I know there's a lot of people that probably will be doing some position squaring, maybe buying some back. I know there's been a lot of short traders around here, so I wouldn't be surprised to see them buy back some of those short positions and put a bid under the market, and I think that's kind of what we're seeing here this morning. Obviously, a lot of trading day left today, and really the next couple of days will be very key going into that report. Should set us up.
Interesting. Okay, let's run through these futures prices here for the folks on Sirius XM channel 147, Rural Radio. In fact, by the way, if you don't know it, you have a free listening period coming up here starting Wednesday, and it'll be free for a couple of weeks. So if you have a Sirius XM radio and you don't have it activated, you can get us anyway, starting this Wednesday. Make sure you check that out or tell your friends and neighbors about that too. Right now in live cattle, we have June now 40 cents higher at 123.82 per hundredweight, but all the deferreds from there on out are over $1 higher. For example, August is up $1.03 at 119.75 per hundredweight. That is 90 cents above our low of the day. More importantly, we're pretty close to our high of the day, within about 25 cents. Now, October up $1.12. On the feeder cattle trade, we'll switch over there, and now we have the August contract up $2.45 at 148.70 per hundredweight. That's a big gain off of our earlier low by $1.20. Nice bounce there. September, $2.75 higher at 146.97. Oliver is switching over to the lean hog trade. We started out under pressure today, then we came back. We were a little higher last time we checked. Now we have a mixed bag going on. We're lower on the nearby contracts. June is currently down 20 at 81.75 per hundredweight. We have July down 17 at 82.38. This is a market with no sense of direction here this morning.
Not yet this morning, but if you zoom out on a longer-term perspective, I think there's more upside potential. We've been talking about this for a little while now. We need to hold 81 on a closing basis. There's some key technical retracement levels there, as well as the 50-day moving average. Ultimately, we have been making higher lows and higher highs, which bodes well for the longer-term trend and the bulls. I think we go retest those March highs of about 83.97. If we get a close above there, I think you start to see some more buyers step into the market and press us towards 87. 85 area, which was really kind of the top end of the range of last year's trade.
Interesting. All right. Well, thanks for the analysis. Good to visit with you again. OlverSloupe with iiTrader in Chicago. Good to visit with you. So interesting developments here, Christina, in the hog trade. They're chopping around, but for those of you that are technicians, the market is holding the uptrend. It went down, but it's holding the uptrend so far.
And like you said, plenty of trading left to go today.
Yeah, mixed action.
All right. Thank you so much, Markets Editor Marlon Bowling.